Right, here we go. It's my Zoomer show. Will, welcome to the podcast. Will, we haven't spoken yet, so welcome.
Hey, Peter. Thanks for having me on.
You're having a hell of a year, right?
Yeah, not too bad. A lot has changed for me over the last 6, 12 months.
Yeah, you've picked up 150,000 Twitter followers, and you're now a regular on the number 2 Bitcoin podcast.
I see how you slipped that in there. But
I
yeah,
mean,
it's been pretty wild. And I'm still kind of in disbelief of how fast it's kind of taken off. So shout out to the
well,
Bitcoin community.
dude, all well deserved, man. And we're going to get into that. And Dylan, look, it was great having you on the show recently. I got so much amazing feedback. Got a bunch of emails from people saying that you gave them faith in the youngsters and support the idea that university is probably a waste of time and money. So appreciate you coming back on, dude.
Love it. Thanks for having me on.
You got a little bit of feedback yourself coming on the show. It was helpful.
Yeah, I mean, got a ton of outreach. Foss is the man. It was just in general, it was a pretty fun recording. So
Yeah, Foss is definitely the man. Well, look, this is it's great to get you both on. This will be a show I definitely stick in front of my son as well. And I don't mean that in any kind of condescending way, but I just want to show him it's not just old fuckers like. Actually, do you know what? I think I figured out beforehand. Remind me, Dylan, how old are you?
20.
And Will, how old are you?
I'm 19.
So basically, your ages don't even add up to my age. That's how fucking old I am. And I think it's really important that we have younger people coming in, different perspectives. There's some clear differences with the likes of yourselves. You've grown up in a time that's only known internet and mobile phones, a different kind of gaming culture, probably a different approach to a number of things. So I think it's really important that we raise up different voices in Bitcoin, especially across the age range. And you two are clearly both very talented. So it's great to get you both on the show. I will do my best not to be just a condescending old twat, especially as you're both smarter than me anyway. So I will do my best. But let's start with Will. Will, you kind of came along into the Bitcoin scene quite recently. You've been blowing up. Like, what happened? How did you arrive here? Give us the backstory.
It was after my freshman year. I was doing like this overnight stocking job, and I started listening to Preston Pish's podcast. And of course, he's focused on value investing and the whole Warren Buffett free cash flow, predicting then the future kind of thing. And when you do that, what you're basically doing is like making this underlying assumption that the measurement, the unit of measurement is sound, right? But of course, we know fiat is not sound. And so understanding that problem then kind of led me to trying to look for the solution, and that led me to Bitcoin eventually. So I just kind of went down the rabbit hole like everybody else, listening to podcasts and all that. And then I put out a couple articles about just kind of like Bitcoin's role in the financial system. And then I think Preston Pish was the first person who actually retweeted one of my articles. And then I went from I had like 500 followers at the time, and then I went to like 2 or 3,000. And then I kept putting out these articles, and people kept reposting them. Yeah, and then I actually listened to a podcast you did with Willie. It was in like late December or something like that. Basically talking about the market from an on-chain perspective, and just hearing the way that he kind of described the market was really interesting to me, because of course it's unlike anything in traditional finance. So hearing him on your podcast really kind of sparked my interest, and then I just went down the rabbit hole listening to different podcasts, YouTube videos that he was in, and some of the other more well-known people in the on-chain space, and just trying to pick their brains and see what they were looking at, and from there it's just kind of like taking a leg of its own.
And what were you studying in college?
So I've switched my major like 4 or 5 times now. I went in as management, then I went to entrepreneurship. I actually started like a small business in my dorm, but we ended up like shutting it down because of COVID. And then I went in for computer science. I took like an online computer science course, realized it was not what I thought it was at all, and then ditched that. And then now we're back to finance. So
It sounds like you should drop out.
Yeah, I was going to say, did you ever think of dropping out like Dylan?
yeah, man, Dylan's been putting the pressure on me to drop out for like 3 months. Like me, Dylan and I don't even know what month it was we met. I mean, it's been a long time now that Dylan and I have been pretty close, keeping in touch. But Dylan, he was way ahead of me in terms of realizing that the opportunity here is just to like focus on Bitcoin, and the opportunity cost of not being involved in the space is massive. So he's been putting the pressure on me for a while, but I'm kind of on the edge. I want to make sure that I kind of have a established income source before I make that leap. But this semester I'm kind of just taking some of my classes off. I'm gonna take like 2 or 3 classes instead of the full 5.
All right, cool, man. Well, listen, look, whatever you do, like, I'm sure it'll be the right decision. College is right for some people, is it right for others? I'm a dropout, but I'm a moron. Dylan's smart. He dropped out. I'm sure if you did, you'll be a success, and I'm sure if you continue and finish your college program, that you'll be a success anyway. But the stuff you've been doing is super interesting. You've definitely been making waves through Bitcoin. People love your work that you're doing on Twitter, and you've just got this like mad new following. Like, how do you take it all in, and what's your kind of thoughts on this? Because you must be kind of weighing up the different opportunities in life. Like, how much time should I spend on my college work? How much time should I spend on Bitcoin? You must be pretty busy.
Yeah, absolutely. Like, luckily right now I'm on summer, so I haven't really had to, face like the full blown what's been going on the last couple months, and like weigh that against school, and like figure out how to kind of allocate my time that way. But it's definitely going to be tricky. Like, just the outreach by the Bitcoin community has just been massive, and like I'm still kind of in disbelief that I have like the size of the following that I do, because I think I personally think there's a lot of people way smarter than me that with much less followers. But I guess people just find the whole on-chain thing really fascinating. So it's cool to see other people kind of like take this liking to that as well. And it's cool to see Willie's following blow up too, and people really find the stuff that he's putting out interesting too.
Yeah, but dude, you're gonna have people who are way dumber than you with more followers. It's just the fucking way it is. If you're providing value, you're gonna get followers. Another thing I just want to ask you about. Obviously, you're studying finance. Do you talk much about this to your fellow college mates? Do you talk about it to your friends? What's the kind of view on Bitcoin amongst people your age? Because what I've found is that depending on the age of the people I talk to, there's a completely different response. When I talk to my son and his mates, none of them see Bitcoin for what it really is, and they just see cryptocurrencies as a whole. I was chatting to a lad this morning, and he was like, he's been plowing into Bitcoin and Doge. He had no understanding of the difference. He hasn't spent time on it. I mean, I know you two probably have a different perspective because you're closer to it. It's not a hobby thing. This is kind of like a significant part of your life. But talking through to your friends, what's your kind of experience?
Yeah, I'm sure Dylan will have a lot of similar things to say that I do, but I think in general, like, people still have that very short attention span, very short time frame of thinking too. So like people are just looking for what's pumping, and then everyone of course just wants to get on the train of like what's the next coin that's going up. And group chats I'm in with my friends and stuff, I had to leave a lot of them because they're just just like the whole Reddit thing. They're just like picking the next train to hop on, and they're not necessarily looking for any kind of like long-term investment that they can like build a future off of. And like that's the way I see Bitcoin. And it is, I think the real challenge for me is trying to get my friends to shift towards that frame of thinking, because I think just like subconsciously through like inflationary monetary policy over time, just incentivizing materialism and like short time frame thinking in general. But also, now we have like TikTok and all this stuff, which I don't go on any of that, but a lot of my friends do. And it's just like you lower people's attention span down to like 15-20 seconds. So you really need to hook them in that first like interaction, or else they're just going to tune out and forget about it. So for me, it's like trying to get them to shift their thinking into like more long term, and like building a future for yourself, and understanding, yeah, maybe Bitcoin is going to get outperformed by cum rocket, but over the next 5 to 10 years you can build a solid foundation for your future on Bitcoin, which you can't on whatever coin you want to pick. So that's been the biggest challenge for me, is like getting them to kind of like shift that underlying frame of thinking. And then also you need to have like some kind of visual. Like I use the stock to flow model. I mean, I don't follow it to a T, but I think it's a great way to get people into the space and just get people to understand the correlation between Bitcoin scarcity and the price, right? And so like I have a lot of friends that literally have no understanding about even basic like supply and demand functions. So having these special colors and stuff, and they can follow it and see where the scarcity and the supply is going to cut in half, and like that clicks for them. So that's been helpful to me. I'm curious, Dylan, do you feel the same way?
Yeah, I mean, for sure. There's definitely, um, high time preference kind of thinking that's ingrained in our society. Like the Reddit thing is so true. It's like all you got to do, man, is make an income, spend less than you make, and stack sats. That's it. And it's like too easy, right? Like just hold, stack, and do nothing and learn. And you can post memes, you can do whatever. Like, but it's like, no, I'm gonna hop from Tesla calls to GME to AMC to Dogecoin to whatever bubble next. And in the end, a lot of these people are, maybe they're up in dollars, but they're like, are we in hyperinflation now? No, but we're in somewhat of like a hyperinflationary asset bubble. And so a lot of these people are just treading water, maybe not even. And so it's kind of unfortunate, but I think most people will kind of come around to Bitcoin, and the market will speak to that.
It's quite a unique position that you guys have with this, because I mean, I didn't really start on my personal level taking my financial future seriously until after I got divorced, because I had to rethink my model for saving, because essentially my assets got cut by 70%. Yeah, I was, essentially, what, at 33, 40, 20, 23 years from the kind of age I wanted to retire at, if I was to retire at 60. And whilst that feels like a long time, it really isn't when you've lost a lot of what you've done. And then again, I didn't really start understanding the value of savings until I discovered Bitcoin. And we're talking about the last 4 or 5 years, and even in that period, I've had a time when I've been wiped out. Yeah, one of the things I'm trying to say to my son is like, you're 17, you could just put a small amount of money away every month into Bitcoin. By the time you hit my age, this could be a very serious amount of money that you're living on. And it's not a huge amount you have to save. But back when I was younger, and I don't mean this in any kind of, in my day, but we didn't have the internet, right? There was no way I could ever have been trading. The only way I ever make money is get a job, save, get a job, save. There wasn't the opportunity to invest in something like Bitcoin. So you guys are in a kind of a unique position where you can get a head start on the next generation because you have this opportunity now, which we didn't have.
Yeah, it's a once in a generation thing. I mean, even maybe not even once in a generation. It's like monetization process of Bitcoin, like a new money coming of age, or this, kind of the rise of this new alien technology is like a once in a humanity type thing. And that sounds super, like, maybe that sounds super outlandish to someone that's not like, studied up and really deep down this rabbit hole, but it's true. And so like, I only have one chance at this. Will only has one chance at this. We all do. And so like at 18, 19, 20 years old, like, yeah, I mean, still have fun, still like party a little bit, still like, spend occasionally, but like for the most part, like I'm trying to save as much value as I can for my future self while it's, still this cheap. Like a year ago, I was saving 4 times as much as I am today in Bitcoin terms. And like that's how you have to think of things if you want to like stay ahead in this rat race.
Yeah, it's definitely a unique time, and you know what? Well, you make a really good point on the TikTok thing, because my daughter has TikTok, and she shows me it and shows me the videos she's watching, and I don't have. I mean, it's on my phone. I've never used it, but there is a thing that came up on Instagram recently. It was like TikTok. It was one of these reels, and I'd never seen it before. And I was like, I looked at it, and I was still there like 40 minutes later, just going through these videos. It's quite addictive to keep watching it, but you suddenly realize you've wasted like a whole hour. And then I was thinking, well, what is the total time that she's potentially wasting each week if I'm not sat there monitoring her? And how else could that time be used productively? And I know she needs to be a kid and enjoy herself, but actually these screens have become kind of an addiction. They've become a bit of a plague amongst youngsters, whereby like, how could this time be used productively? Could they be learning a musical instrument? Could they be just, making something? But they're not. She's literally addicted to this thing, like video after video after video. And I do limit time, but you can't sit there all the time with somebody and do that. And that's a really good point. It's everything seems to be this kind of race to the bottom of short time attention, short term decision making. Can I make this trade? Can I make that trade? So if you had to like learn your own self discipline with this.
Yeah, absolutely. Like I never read or anything. I did pretty bad in high school and like never really paid attention in class. So I never had read a book before until like a full book until I got into Bitcoin. Um, and so yeah, that was like a big adjustment for me. But it's weird though whenever you're interested in what you're doing, it doesn't feel like learning. So this has been the first time in my life where I've been able to read a full book, on my own free will, and I'm interested in it. And like, I don't want to look at my phone. I want to finish the book because what I'm reading about is so fascinating to me. And so yeah, it's been cool. I think like that's the one thing I never really got was reading is fun when you finally find something that you like. And I guess all the books I had been reading my whole life, they were just I don't know, I guess they were just crappy books.
Well, has that made you reflect on the education system itself?
Yeah, I personally think it should be more I don't really know how to word this, like more free structured, like you should be able to kind of pick and choose the classes that you like to take, similar to college. I told you I've switched my major a bunch of times, but the classes that I've taken aside from just the mandatory undergraduate ones that I've got to pick, I've actually enjoyed. Like my two econ classes, I liked those, and I've taken one finance class, but I did enjoy that one. It's just like when you give kids the free reign to kind of choose what they want to put in their brain, then they're way more apt to um, you know be take their schooling more seriously versus like when you're just coming to them and saying, "Hey, you have to learn this," and it's something that they could care less about. Then yeah, obviously their grades probably aren't going to be as good.
It's interesting you talk about that free learning. I've just looked it up because I know there's this school in Calabasas. It's called the Muse School. It's run by James Cameron, the film director, his wife and her sister, and that has a pretty free and open schooling program whereby I might not get it completely right without trying to look it up as I explain it, but I'm pretty sure it's focused on allowing you to pick a topic per semester, and that's pretty much all you study, and that can be anything. You might want to study Italian cooking, or you might then want to study the piano, but it's completely free form of schooling, which is kind of unique. And I'm with you, really. I mean, this is a school system that was set up in Victorian times to teach people to work in factories, and I think we've kind of grown beyond needing to learn facts and memorize facts when we have supercomputers in our pockets. I don't completely understand the value of it anymore. Um, and I guess you went through that transition, Dylan, yourself during the college program as well of rethinking education.
Yeah, totally. I mean, it's a lot of things they'll you'll study up on something and it'll be like, all right, well, no phones or no computers. It's memorization. And you're like, well, no, I have a phone that I can look up anything in a split second. And like in the real world, if you want to call it that. And so it's definitely outdated. There's definitely like information is free. Like I loved Jeff Booth and his kind of thesis of like technological deflation because like I lived it. I was like reading this book while in school, ignoring all my classes like Will. And like I was like, wait, why am I paying for this? Because I'm learning for free right now. Or like, with the $14 book I just bought. And so, that's real. And like the information that's out there for free every single day, like what Michael Saylor's doing with Saylor Academy, all that stuff. Like, I don't think college or you're like the school system looks the same in 10 years. I mean, at least I hope not, like the people going 6 figures into debt to quote unquote get a good job in the future. It's like people are just kind of shoved into this. And it's kind of unfortunate because they're putting themselves decades behind in terms of time. So
So, listen, you both got newsletters. Will, tell me a bit about yours. How long has it been running? What's it about? How many subscribers have you got? And why the fuck is it free?
Yeah, sure, thanks. So like a while back, Palm came to me and he said, I really find this on-chain stuff interesting. I think there's a lot of opportunities here. And so it's like the kind of intro level way we decided to kind of do something here is just create a newsletter and send it out to as many people as were interested and just kind of promote the thing. So To me, I wanted to make it free because I think there are some good newsletters out there. Of course, Willie has a newsletter, and um, Willie's obviously one of the people I really look up to. But it is $50 a month. So I was kind of approaching it saying there's a lot of people that are interested in this stuff, but perhaps don't have $50 a month. So what if there was, some way that they could get access to this information completely free, and that was kind of where we birthed the idea for the newsletter out of. So every week I just send out a basically short synopsis of everything that I see in the week from an on-chain perspective, and then we also Pomp and I do the weekly podcast where it's pretty much just a reiteration of everything in the newsletter. And so like, yeah, we don't charge for it. I mean, I do run an advertisement over it and it's at the end of it, but and that's kind of the trade-off for making it free. Cause I think like there's a lot of talent that is yet to come into the space in terms like the on-chain space. I think it's just so early. And Dylan, he doesn't like super involve himself in the on-chain. Like I know he looks into it, but I'm sure he'll agree. Like there's stuff now that we didn't even have 3 months ago. We didn't even have 6 months ago. And then when you look back like 2 years, when I first started learning about this, a lot of it was watching these videos with Willie and David Puel on Tone Vase's YouTube channel from like 2018, because that's the only content that was like available on this stuff back then. And the stuff that they're talking about just seems archaic now. So it's been cool to see the space move so fast, and I think like getting the information out to as many people as possible is just going to lead to further acceleration in terms of like the new metrics and stuff that we have available.
Yeah, but there is a halfway house. I think Dan Held does it, where he does both a free and a paid newsletter. And I mean, I don't know the thing between you and Pomp, but like, if you're looking for an income stream so you can think about your college, um, you quite rapidly could build it up through that. But look, that's down to you. I'll leave you to it. Tell people where they can subscribe now, so we can ping some people over to it.
Yeah, sure. It's BTC by WC3.substack.com. Or you can just go to my Twitter and just click the link in my bio.
Okay, we'll put that in the show notes. Okay, so I want to talk a little bit about on-chain data because it is something I cover every month with Willie as well on my podcast. I know you're covering it with Pomp. It has had some critics recently. I've seen some of the technical traders be quite critical of on-chain data. My kind of view on it was, and I talked about this with Willie, because after the big market crash, my YouTube comments were quite critical towards him. And my view of on-chain data, it's another tool. It's not a crystal ball. It can give you information. Sometimes it's right, but you can't account for market crashes, coordinated FUD, massive sell-offs based on that, Elon Musk tweeting weird shit. You can't account for that in on-chain data. You can only just look at the data it's given you, and that's another tool you can use alongside TA and other things. So what about you? Have you noticed the criticism? What's your thoughts on it?
Yeah, absolutely. Like my Twitter notifications have been pretty much just wrecked over the last month and a half. And the way I see it is similar to you. Like on-chain is another tool, like you said, similar to TA or order book analysis, or whatever kind of analysis that you're doing. But it should be used in unison with other things, in my opinion. You can look at on-chain to kind of get the more broader macro picture of the market, right? But then you can use like order book analysis and TA to get like a more precision entry into your trade. So yeah, I think like also looking for confluence amongst those things is pretty important. So for example, like Willie and I had been watching for this supply squeeze that had been forming, and price kept going sideways down, and people were calling us crazy. But at the same time, this guy that I met on Twitter, his name is he goes by John Wick, but he's like this options trader, and he had been talking about this volatility squeeze, and we were kind of messaging back and forth. We were like, this is really interesting. You kind of have this synergy between like TA and on chain is kind of lining up here, and then all of a sudden we had 10 straight green daily candles. So I think it's a great tool. I think you could get a lot of signal using solely that tool, but it's best used, with other things and looking for confluence amongst, all those different tools that you're using. And then, yeah, like, Willie and I think we're both bullish in that like 50, 60K range. And what happened is, you had these outside factors that I don't think on chain were really taking into account. And also, I don't think we were thinking about the whole grayscale thing, and we can get into that too. But I think that played a big role in the drawdown, some of these ARBs going away. But in general, like, Elon coming out and the China FUD, like that wasn't you couldn't have predicted that with on chain. But once those events happened, then you did see that get reflected in the fundamentals. So I think sometimes on chain leads price, where you have, on chain saying one thing and then it takes a while to get reflected in price. But then, of course, sometimes price reflects on chain, right? Like if we nuke or all of a sudden some unexpected outside factor happens, then you're going to see that change in fundamental investor activity that you couldn't have predicted before because you couldn't have seen that event. So, like, it should just be used in discretion. And, it's like you said, it's not a crystal ball. It's not going to work 100%, at the time, but it is, highly reliable given that there aren't other outside factors that occur.
How wrecked were your replies?
Yeah, my mentions were pretty bad. Got a lot of angry messages. I think just in general, whenever the price goes down, people look for those who still, aren't pessimistic as they are, and then they kind of like, I don't know, they just collectively look to bring those people down and I guess drag them down into the same state of mind they are. But yeah, I've never seen anything like that in general, and I don't know, it's been kind of a good experience for me to thicken up my skin a little, I guess.
What about your DMs? Are your DMs open?
Yeah, I have my DMs open. I'll check them like once a day and just kind of give it a scroll through. But yeah, there's some nasty stuff in the DMs as well, like just oh, you're an idiot and all this kind of stuff. But
Yeah, you got to learn to ignore that. It can get pretty rough and brutal out there sometimes. And I think what it is I think some people have taken on-chain analysis as a crystal ball, because sometimes, some of the things I've discussed with Willie are unnailed on correct. He absolutely nails it. He sets a bottom. That bottom is correct. And I think some people have ended up using it as a crystal ball, and have probably over leveraged themselves, taken risks they shouldn't have, and potentially got wiped out. Like leverage trading got wrecked, and it's not a good experience getting wrecked. And if you're of weak character, you want to lash out and blame somebody, but really every one of those people who's giving you shit really needs to self-reflect and look at themselves, because they're responsible for their own decisions, and they still need to be grateful. So I'm glad you're able to deal with that okay. I haven't in the past, and it is a brutal experience. And yeah, so I'm glad you're okay to deal with that. I got another quick question on that, then I want to flip it over to Dylan. In terms of like Willie, I obviously talk to him every month, and he's been doing on-chain data for quite some time. Do you two have a different style in any way? Have you noticed that you got a different style?
yeah, I think obviously I'm heavily influenced by Willie, but I would say that we're similar for the most part, but Willie is a bit more creative than me, I think. I just kind of like take ratios and just like to compare things and just like kind of see what sticks. But I think Willie is a really critical thinker, and he takes more of an approach where he'll kind of look at a problem and say, oh, I want to understand this. I want to understand this better. What kind of things can I look at, and then like narrow it down, I guess, that way. And I just kind of go through, and I'm just comparing random stuff and kind of seeing what sticks. So I kind of just take like a crash course, more like approach to it, where I think Willie's is like much more methodical and like thought out, and the way that he thinks about what he wants to like compare, and how he wants to filter through the data and stuff. But
Yeah,
for the most part, it's pretty similar.
I'm not sure how much you actually trade against your own data that you're looking at, but Willie is like a experienced long-term Bitcoin trader, so he is trading against his data. So he's got real skin in the game against that. I mean, you may be doing exactly the same to the same levels. I don't know, but experience is another thing, right? That, I think everybody knows you've been only doing this for some time, and I think the work you're doing is great. I use So whenever I got an interview with Willie, I look at both of your Twitter feeds and look at the things that you're saying and compare and contrast, and that helps me, prepare for my interviews. So I appreciate the work you're doing. What about you, Dylan? How much time have you spent looking at on chain? What are your thoughts on it?
Yeah. I mean, I think there's a couple of things. Like I love looking at on chain. I love like, so for for what I do, I like do all the content for Bitcoin Magazine's premium product that they just stood up. It's a paid product, but we put together like 20 pieces of content a month about on-chain data, derivative markets, and then global macro, and like kind of put it all together. And there's a couple things there. So like one, myself personally, and basically everybody at Bitcoin Magazine, it's kind of like a maximalist crowd. We have like this like a 10-year, even longer than that, like multi-decade long thesis that like Bitcoin is the going to be the global reserve currency. It's going to be worth the equivalent of hundreds of trillions of dollars. And for most people, all you have to do is acquire and hold, right? But there is a pretty large market demand for maybe not day to day, so-called trading, but just understanding what's happening in the market in basically the most transparent market the world has ever seen, which is why on-chain data, especially like the derivative markets, all that stuff is so fascinating because you can see real time, like flows, who's acquiring, who's not, like how long a UTXO has been dormant and if it's moved or not, all these sort of things, and in a kind of a probabilistic way, a lot of it can help you make decisions about the market and what to do or whether to de-risk or not. So, kind of putting all those things together and seeing like Will, for instance, and all the on-chain guys for like 2 months, myself included, we're saying like, hey, like there's going to be some sort of supply shock here. It's happening, and everybody in the derivatives market's short, meaning like all these guys that are trading perpetual swaps or on Binance or doing this, they're going over the derivatives market and they're shorting. And meanwhile, people on the spot, people are literally just hoarding UTXOs. They're hoarding coins at a pretty fast pace. Something's gonna pop, and like nothing happened for a while. We trended to 29. Will and everybody was getting absolutely dunked on, and then what happened? There was a huge pop. So like putting all these things together, it can kind of, I think on chain sometimes lags for a long time, but it's still pretty fascinating just being able to basically look at the capital flows of this asset. It's unlike anything we've seen.
Well, that's the thing about this kind of data, right? People are hungry for it. It doesn't matter how interesting Bitcoin is and how much you want to teach people about the fundamentals of Bitcoin or what it can do for countries like El Salvador. Facts are, the data doesn't lie. If I look at my show downloads, outside of my interview with Bukele, my second biggest show is a show with Willy Woo. And I think 2 of my top 5 shows ever have been shows with Willy Woo. And if you go to my top 10, it's more like 3 or 4. People are absolutely hungry for this information. There are a lot of people out there who don't really give a fuck about the Bitcoin fundamentals. They just see it as an asset to trade. And that's something we have to accept. Not everyone is going to buy into it. But something you said was pretty interesting, Dylan. I'm going to quote you. The price does not go up on good news. Price goes up when the marginal seller has been exhausted. The marginal seller can be exhausted based on good news, though, right?
Yeah, I mean, I think there is some causality there, but I like that a lot of people look at news events or, like even with the El Salvador announcement, it was like, oh my God, a country, and it's a small country, right? Like 6 million people, $24 billion GDP, but it was like a country just adopted Bitcoin as legal tender. Bitcoin's 39K. Like, are we about to pop? And it was like, nope, we're about to trend down to 30 for the next 2.5 months. And I think some people are like, what the hell? But that's Bitcoin. It's like every single day. Like I think when you kind of come to understand Bitcoin, the HODL mindset, the stacker mindset, you realize there's a floor of people buying every single day. Like I buy every single day regardless of price. So do probably you two maybe, and millions of other people around the world, and that number is growing. And on the other side, you have people that are selling or trading or wash trading or doing all this stuff. But every single day, the amount of Bitcoin that's put away for the next decade, 2, 3, maybe forever, that's never going to hit the market goes up. That the free float gets a little bit smaller. And so the marginal seller is often what kind of drives the price. And when we're kind of consolidating like we have for the last 3 months, anybody that's really wanted to sell has kind of sold around here. And so that's why we see, like, especially after all-time highs break, you see Bitcoin go parabolic and trade like no other asset on the planet. It's just because of these supply dynamics that no other asset on the planet has ever seen.
Yeah, I mean, you're super right. It's quite interesting. One of the other things that I noticed, I think it was when Elon Musk announced that Tesla were going to accept Bitcoin the buying of cars, and the price suddenly shot up. And I think within a few hours, it had come back down to the same price. And when I saw that, I kind of realized, like, hold on, why isn't news affecting this? And sure, we get momentum at points, but I think there's like a wider momentum that happens, but there's a bit, like you say, there's a bit of a lag with this. What about you, Will? Like, I know with Willie, I think I spoke to him last time, and he said about this. He said he doesn't ever trade based on news. He only trades based on the data. I guess you're in a similar position.
Yeah, for sure. The way I look at it is like over the last 2 3 months, a lot of the coins that have been sold have all been young coins. So, like Dylan said, you can look at the UTXOs, look at separate them by age, by the size of the wallets or entities that are holding those UTXOs. And so what you've seen is like the average age of the UTXOs being moved has been trending down and down and down over the last 2 3 months. And so to me, what that's showing is it's basically noobs in the market. We're not seeing selling from these long-term holders or experienced market participants, right? It's all new market entrants. And I suspect a lot of this has to do as well with some of these arbitrage opportunities that popped up at the end of at the end of 2020, beginning of this year. And so some of these sellers were people that had come into Bitcoin in this market neutral way, did not care about Bitcoin as hard money that's going to be the new monetary premium for the whole world. They were just looking at this as a number on a screen, and the trade was over, so they move out. And so I think that played a big role in the move down. Miners selling, they're forced selling from the hash migration. I think that played some role, but at least in the data that I look at, it didn't play as big of a role as some people had stated. Because I mean, according to Glassnode, the miners sold about a little over 5,000 coins in like mid May to mid June. So that's not anything that was gonna really affect the market. I just think it was new, hedge funds that had gotten in recently. You saw this huge uptick in like new whales, kind of in like January, December, January, that time frame, which kind of aligns with some of these ARB opportunities popping up. And then also, then you look at when the number of whales started trending down, that also correlates with some of these ARB opportunities going away. So I suspect that that played a huge role. But at the same time, you have these, like you were saying, these long term buyers, right? These people with conviction that are just coming in, and they keep stacking. They don't really care about the price. And so you look at these smaller wallets. I know Willie's talked about this on your show before, but when you look at these smaller wallets, they've been hockey sticking upwards in terms of their holdings over the last month or two. I've actually created a ratio taking like all of retail's holdings, so any entity on the blockchain with less than 10 BTC, and then you're comparing that to the overall supply and circulation. And so, like, when you plot that out over time, what you see is that retail holds a larger and larger portion of supply. And then at the same time, when you take whales and you do that the same thing, and you filter out like the purpose ETF, you filter out grayscale, you filter out exchanges, because these are all these entities are recognized as whales on chain, right? So you have to filter those out. What you see is that over time, whales are distributing their coins. So you have this dichotomy where retail is steadily buying, right, over time, increasingly more so. Whales are distributing their coins, and so to me, what that shows is just really healthy network growth. And then, in the recent last 2 months, it's been interesting to see retail actually outpacing the buying of whales. So every single cohort has been buying, which is, first of all, like this is a side thing, but like it's unlike anything that you've ever seen going back in Bitcoin's history. Literally every single cohort is buying right now, when you filter out for those ETFs and stuff. But at the same time, retail's been buying at a greater pace than whales have, and I think they have outpaced them as of last week. The last time I looked, by like 25 or 30,000 BTC. So yeah, I mean, like people really don't give as much credit to the little guys. And then like you also aren't considering the fact that a lot of retail, they keep their coins on exchanges. So some of these entities that I'm looking at, they're showing they could be like custody solutions, or also when we're talking about coins moving on to exchanges, like there, if we were somehow able to like look into these custody providers or just the exchanges in general and see how many retail participants like held however many coins on those platforms, I suspect like the number of UTXOs held by these small guys is way higher than what we see right now. But over time, you do see it, that positive trend of like distribution where like yeah, people still talk about like Bitcoin being highly concentrated, and to an extent, that's kind of true. But Bitcoin's only 12 years old, and so to see like this natural distribution progression over time, I think is like really good.
Do we know if on exchanges that customers are actually buying UTXOs, or are they buying a number in a spreadsheet and they're only given a UTXO when they withdraw?
That's what I think it is. I think it's just that the exchanges have like an SQL database, and like they'll shuffle around UTXOs when need be, but for the most part, I don't think that coins are moving on chain unless they need be, and that's how
Yeah,
Bitcoin
'cause
scales. Like that's okay, you know.
Yeah, then and that is fine, and also it just saves on misallocation of Sats for allocating UTXOs for each person. Um, okay, there's a really interesting point though there, because Willie made the same point to me. He said retail drives bull markets. I was like, no, surely it's not. Surely it's like Tesla, and maybe if Apple came in, and and actually, like, he came to prove that thesis was right, especially in the last show we did. And I think what it is it's a bit like you say. You've got these hedge funds. They've made an investment. It might be a million, 10 million, whatever, 100 million, and they've suddenly seen like whatever, maybe a 3x, a 5x, an 8x. They've delivered for their fund. Why do they need to take any risk further? It makes total sense for them to withdraw their Bitcoin. I think that is it Ruffers, the gold people, I think they bought and they sold a bit, and then I think they sold everything. So I think they've delivered. I think you're right. I think that growth in retail is super interesting as well. And one of the things I wanted to ask you then, Dylan, is that the price doesn't go up on news, but you're a bit of an expert in macro analysis. We talked before about inflation rising and bond yields with Greg. We talked about equities having these like crazy valuations. Do you think that is just the narrative which is feeding into retail, which is making them interested in Bitcoin?
Yeah, I mean, I think there's just nowhere else to go. I mean, especially for me, like I evaluated the landscape of where to allocate assets, to preserve purchasing power, to grow purchasing power, and it's like the reality is, okay, every bond on the planet, essentially, especially if you don't use like bogus CPI metrics, it's giving you a real yield. Like I'm not going to buy treasury bonds. Okay, check. For equities, the price of any equity, and like we will talked about this a little bit earlier, but there's like discount cash flow models. If the cost of capital is zero or negative, well, the fair price of an equity is like infinity. So you see like equity is just absolutely ripping. It's like PE ratios on every equity, especially like so-called growth stocks who can like Apple can borrow for like no cost, negative cost. So like what's the price of Apple? What's the price of like all these FANG stocks that like are good companies? They're great companies, but not a great price. And so I think Bitcoin is kind of a fix for a broken cost of capital, a manipulated cost of capital. But before, if there was no Bitcoin, right? Like, they in the 1940s, and Lynn Alden talks about this a lot. They basically kept bond yields below inflation for like the entire decade, but they had confiscated gold. So you really had no choice. You had nowhere to run. You had to hold bond yields, and you got screwed, or you could allocate to equities, but that was basically it, right? Like, or you could buy real estate, but it's essentially all kind of the same. It's all kind of the same trade. And so with Bitcoin, it's like, yeah, you can use financial repression. You can keep bond yields low. You can try to inflate the debt away, but ultimately, like, I have an escape valve. And so I think more and more people realize that Bitcoin is the escape valve that nobody can mess with. And like financial repression, yield curve control, all this stuff, the greatest monetary experiment ever across across the world, all global central banks, they're all doing the same thing. Bitcoin's that escape valve. And so it's still a drop in the bucket. 700 billion is tiny. But just 1% of flows from, global equities or bond markets, and Bitcoin's going to 2 or 3x.
Is this macro analysis become like your own rabbit hole, because you speak so fluently on what's actually happening? And when you do it, you come across with like a passion for your understanding of it, not a passion for the reality. obviously understand its financial oppression, as you said. But has that become a different rabbit hole for you?
100%. Yeah. I mean, I was that's how I kind of just like stumbled upon Bitcoin, was like, I was interested in finance and economics and all that. And I kind of just like learned about Bitcoin or crypto or whatever, like at the same exact time. And like kind of put the puzzle pieces together at the same time. Where like in March of 2020, especially, I was buying Bitcoin before that, but I wasn't fully orange pilled. And then equity markets tanked by 35% in like a month, and like the treasury market went no bid, and everybody's like was like running around on fire, and Bitcoin went down 50% in a day. And then it was like the Fed came out and was like, all right, we're buying corporate debt. We're going to stuff $2 trillion into the bond market in like a month. And we're going QE infinity until said otherwise. And I was like, okay, wait, like there's no alternative. Like there's like Bitcoin, that's it. Like for all these other reasons that we've talked about, 21 million hard cap supply, no one can mess with it. You know, it's like hard money in the digital age. Like traditionally, like it's pretty sad to say, and I said this last time, like if Bitcoin didn't exist, I'd be like buying gold coins. Like it sounds depressing as hell, but like that's just the reality of like where we are in the current, macro environment. It's like you need to find hard assets, because anywhere else, and you're gonna get screwed. And so yeah, I definitely have some sort of passion for like macro and kind of Bitcoin as the answer from like the financial lens, because that's another way that like I orange pill people, like for the person that doesn't know anything about macro, I'm like, hey, yeah, it's money that they can't print. But for someone in finance, it's like, hey man, what are you gonna do? Buy equities at 250% of GDP, or buy bonds when global debt to GDP is 400%? Like, good luck, have fun, So yeah.
I'm going to quote you again as well, because it's relevant to a conversation I had recently with Lynn Alden. So we reviewed Taleb's paper, and one of the parts we talked about was whether Bitcoin is a inflation hedge. And whilst it's been a narrative piece, I've echoed and said, yeah, Bitcoin is hedge against inflation. I did have some kind of doubts in my mind, because it depends on the timescale. Bitcoin might not necessarily be a hedge in inflation over a short period in time. It's not a hedge against inflation if you bought in 3 months ago and then you had to sell. It has to be against certain timeframes. And I'm just going to quote you here. You said it's important to remember that Bitcoin at this stage in its adoption phase is not a hedge against inflation, but rather perpetual credit expansion. So it's kind of echoing what you just said there. But can you just go a little bit more into detail on this perpetual credit expansion, but explain it in a way like someone like myself who just doesn't understand this can understand it, and what it means and what the threat here is?
Yeah, so like you'll see a lot of people, depending on the price action of Bitcoin. If it's going up, if it's going down, if it's March of 2020 when Bitcoin tanks with everything else, and they say, haha, Bitcoin's not a hedge against the financial system. See, it went down during the biggest liquidity crisis ever. And so it's like it's either not an inflation hedge or not it doesn't work against deflation and like all this stuff. But I think that's taking like a microscopic view of things. And in my opinion, and I've kind of been hitting this point home a lot recently, I think that Bitcoin over the medium to long term is a hedge both against inflation in terms of credit expansion, and deflation, which is credit contraction. And so for two reasons, or many reasons, but credit expansion, we can think of that as QE, or basically in a fiat currency system, money is created through lending. So like a commercial bank, there's deposits at the commercial bank, they extend a loan, they fractionally reserve those deposits, and they extend out a loan, and in that process money is created. The money supply increases. The bank now has an asset, and the other person has a liability in cash. And the money supply increased in that sense. And so ultimately, and this is kind of like the long-term debt cycle stuff we talked about last time, there's an end to the upswing of a credit cycle boom, right? And that's a bust. And so Bitcoin is a hedge against credit expansion in the sense that your wealth can't be diluted away, right? So like if you're holding a bond today, you're a 30-year treasury bond that's yielding 1% interest or whatever it is, you're going to get paid back most likely. Like it's going to be money good, but what does that money buy you? And so that's where Bitcoin comes in the sense that it's a hedge against inflation in the sense that you can't be diluted. Like they can't, if the bond market goes no bid again, well, the Fed's going to step in and they're going to print probably 10 trillion next time. And so, yeah, you got paid back, but what is that worth? And in the other sense, in a deflationary scenario, in a true deflationary scenario, and say in March of 2020, if they didn't step in, right, what would have happened? Well, all of the banks would have gone bust. The equity markets would have drawn down 90%. The biggest everything bubble ever would have unwound. And so, in that sense, there's immense counterparty risk everywhere in the financial system. You're probably, if you have money in the banks, you're probably not going to get them back. Brokerages would probably fail. Like, this sounds like a doomsday scenario, but that's what deflation is. And in like the 1930s, it was the gold that you deposited at the bank. Yeah, it's someone else's because there was a bunch of claims. And so in that deflationary scenario, Bitcoin is also what you want to hold because, yeah, it might draw down in dollar terms, in nominal dollar terms, because the money supply is contracting. But you have an asset that you can hold and nobody can dilute, and it has a production cost. It has a production cost that won't go away. And in the worst case scenario is miners unplug and there's a difficulty adjustment and they plug back in. And so both doomsday scenarios of inflation or God forbid hyperinflation or deflationary collapse, Bitcoin is this pristine asset that doesn't really care and will keep on chugging along. And I think not a lot of people understand that. And if you're looking at week to week correlations, you can get kind of confused.
Will, do you spend much time looking at the macro stuff and talking to Dylan about it? Does it influence you in any way, or are you just totally plugged into the on-chain data?
Yeah, I was into it when I kind of first got into Bitcoin. Like I said, like I wrote a couple articles on like Bitcoin's role in the macros, that whole picture. And I like Ray Dalio's work. I've read Ray Dalio's Big Debt Crisis. I think that's another book that Dylan will probably say is great for anybody trying to understand this stuff. Yeah, I just as of lately haven't paid as much attention to it as I used to because I am so kind of like hyper focused in my little world. But I kind of go to Dylan for that, so I'll call Dylan up and just be like, "Yo, what's going on, man?" And then he'll give me the spiel and he'll ramble for like 20 minutes, and then I'll ramble about my stuff for 20 minutes, and that's usually how it goes. So yeah, I lean on Dylan a little more for that lately, but it's definitely something that like I used to look into a lot.
Yeah, look, it's all fascinating data. For someone like myself, it's like the combination of the two really helped me. So the kind of things that Dylan's talking about, they just support my conviction in holding Bitcoin and holding the majority of my wealth in Bitcoin. But certainly the on-chain data sometimes gives me some reassurance about what's happening with the market when it's tanking, but also some confidence about the future. Another topic I wanted to touch with both of you on, I'm going to defer first really to Dylan because I think this might be more in your bag. Dylan, this infrastructure bill, how much have you looked at it? Obviously working at Bitcoin Magazine, I imagine quite a bit.
Yeah. I've seen the kind of the proposals and all that. Not ideal, but I think ultimately, it's more of short-term inconvenience if it passes, or if the amendment isn't passed. It's pretty vague, so I think the worry is that Lightning nodes, miners for other crypto in general, not Bitcoin, but like dexes and all this stuff. Altcoins are definitely far more far more at risk. So, but yeah, I think ultimately it just wouldn't be ideal and it'd probably drive away innovation. But at the same time, I'm gonna still run my node. Not gonna bow down to tyrannical rules. And I'm not saying that it is per se, but it, like, the Bitcoin network will chug along and you can't stop an idea whose time has come. And so like, onerous regulations will happen. I mean, like, it's 100%, it's a certainty. It's going to happen globally. You're going to have more people or nations that are like China that are like, hey, like, get out, we don't want you. And at the same time, we're going to have countries, but also states like Texas, maybe Florida, other jurisdictions that are saying like, no, we want you, we want Bitcoin, we want innovation, come here. And so it's not ideal, but hopefully it gets changed. And regardless, cypherpunks write code. We're just going to build around it, and ultimately what some bureaucrats write or sign on a bill doesn't matter.
Yeah, I'm glad you brought up Texas and Florida. I had two conversations yesterday, actually. One specifically with Parker Lewis, saying that actually Bitcoin is a very kind of Texan idea. I talked to Dan Held about it, or a very kind of almost Republican idea in that really this expansion of the credit, the money printer, that's going to really affect people, especially if we see much higher levels of inflation. And politicians are there to protect their and look after their constituents. They're meant to be there to support the voters. And it always feels like the Republican states do that a bit more at an individual level rather than collectively. And so if there are high signs of inflation coming in and people want to use Bitcoin as that hedge, it does feel like the Republican states are the one to naturally fight back and say, no, like we're going to be supporting Bitcoin because this is what our constituents are asking for.
Parker Lewis had like an excellent tweet. I think it was yesterday or today, maybe. He was like, liberals will love Bitcoin when they realize what it means for low income families. Democrats will hate it. Conservatives will love Bitcoin when they realize what it means for balancing the budget. Republicans will hate it. And it's like, it's so true. I mean, like the kind of the parasites on the system, I'm not talking to anyone in particular, but you could probably name a few. They hate Bitcoin and they're gonna hate Bitcoin. And if they haven't realized it, like what it means, like Brad Sherman, for instance, right? Like he's like 2 years ago, he was beating the drum. He's like, we need to ban Bitcoin. It's a threat to the dollar and our reserve currency status. And half the people were like, oh, look at this old crank. But like Brad Sherman's right. Like it is a threat. And anybody that I think Michael Saylor has been like, no, it's not a threat. Like, don't worry, guys. And like Michael Saylor is a smart guy. Like he knows what he's doing, obviously. But I think there is some merit to kind of downplaying it. But at the same time, like there's just this reality that Bitcoin is a threat to dollar hegemony. Bitcoin is a threat to what Congress has been doing for the last 50 years. And there's certain people that will, throw everything they got at stopping it.
Saylor's interesting at the moment. Like it's a real tricky one because he's walking this fine line between wanting to be like a Bitcoiner and supporting the cyber hornets, as he keeps referring to, while at the same time trying to divert that threat of regulation, or in some ways signaling that he supports certain amounts of regulation if it feels like let's put a stick and plaster over this, let's buy ourselves more time. I'm finding it hard to actually deal with at the moment on a personal level. I'm like, we're having someone with a very high profile controlling 1 in 200 Bitcoins publicly playing a game of chess with regulators. So I'm not convinced how healthy it is, actually, because I wonder if that control of that much Bitcoin has put him in a position where he's having to walk this kind of fine line between it. Maybe it becomes kind of unhealthy because the views and thoughts that are coming out sometimes feel a little bit like they're contradicting themselves at times.
Yeah, I mean, he's definitely in a tough spot. I think he's whether he meant that or not, he's like kind of the face of this, or at least to some people, or he's one of the biggest faces. And so his words have a lot of weight, but ultimately he's just another node on the network. And that some people may think that's a wild understatement, but that's the truth. The regulatory landscape, all this stuff, like Bitcoin's gonna keep chugging along. And like short term, weeks, months, years, even a lot of this stuff is like seems crazy, or like this regulation, it's so burdensome. But like Bitcoin's died and come back plenty of times, and I'm not saying it's going to die, but like it's here to stay. And then any regulation or anything, like people are just going to route around it. Like like look at the war on drugs, right? Like Bitcoin's information, how do you stop it? Like I can run a node routed on Tor, and like if you make privacy a criminal act, well, guess what? The only people that are going to have privacy are criminals. Or like, so if you make Bitcoin criminal, then well, criminals are going to use Bitcoin and they're not going to be able to do anything about it. And so, I think the regulations and the state and all that stuff, like we have to worry about it. And some people are like, don't call your senator. Like that's against the ethos of Bitcoin. And I don't think that's true. Like, I mean, call your senator, right? But like at the same time, if your senator votes against it, well, too bad, because I'm going to use Bitcoin. All
right, let's talk a little bit about the future. Will, I'm always asking and pushing Willie for his kind of like predictions, where it tops out, how he thinks like the rest of this year is going to play out. Is it just going to be a traditional bull run where we're going to see a squeeze towards the end of it? We're going to see a supply squeeze and see that kind of like in the bull market 4-5x. What are your kind of feelings on it? And like, I'm not going to hold you to this. I know you've only been looking at this data for a short period of time, but like, I'm still interested in your views on it.
Yeah, I think like as far as kind of trying to make a prediction for the end of cycle, I think that's really difficult to do. I think you can only really get a grasp of perhaps what's going to go on over the next couple weeks to maybe month or two based on the data that you have, currently. But just based on Bitcoin's historical performance, we do have some modeling around how we can kind of predict Bitcoin's theoretical price peak. Willie has his top model right now. That's I checked it this morning. Actually, it's showing $176,000 is kind of the on-chain price ceiling, while Delta price, which is served historically as Bitcoin's price floor, that's right around 14K. So that's quite the range in there. But yeah, I think like over the next couple weeks to maybe month or two, based off of some of these like accumulation trends we talked about earlier, I suspect we're going to see higher prices than we are now. Short term, we're still technically in this range. We could come back down and maybe retest the middle of the range, around like 35, 36K. But, over the next couple weeks or so, I suspect we're going to start to see some of these aspects of the supply shock that we've been talking about start to get priced in.
So you think we're most likely going to be heading back up?
Yeah, I think the big thing is when we start going up, what I'll be looking for is this a dead cat bounce or is this like bull run continuation? Which obviously I lean on the latter, but if we started to go up and then all of a sudden you saw these long-term holders who have been buying, if you started to see them dump, basically looking for some exit liquidity and trying to like sell the dead cat bounce, like to me that would be a really bad sign. So we'll have to see once we theoretically get this price move out of this range up in, from 42K, it's pretty much just air between 42K and like 49, but we'll have to see in that range once we get up towards 49K, which I think we will. Do those long-term holders just start taking that as exit liquidity and like, do they just start dumping their holdings then? Or are they, expecting higher prices and are they continuing to hold? But I kind of lean on the latter just because of how strong they've been accumulating. We've seen like unprecedented buying from these long-term holders over the last couple months, which granted some of that is short-term holders aging into that long-term holder cohort, which is they have Glassnode uses a 5-month cutoff. So like some of that is are UTXOs that were bought on March 5th, and those are just now starting to age into that long-term cohort. But in general, aligning that with some of the other accumulation trends we've seen, I think the vast majority of that is actually buying from these long-term holders. So yeah, that's what I would be watching to see.
Awesome, man. All right, Dylan, what about you? What are you working on? What are you looking at? What's your next article?
Just dropped a monthly report for July. Kind of talking a lot about what we talked about today. Like the accumulation, there's like the big trend, and then like stuff happening like underneath with the derivative markets, kind of whipsawing the price around. For me, like I follow a lot of the on-chain stuff, but I think, and I don't think it happens this year or even next or whatnot, but I think over the 2020s, I think the on-chain metrics not break down, but like the models all break to the upside if the trust is lost in the system, right? Like if the if the legacy market cracks and the Fed has to, or they all have to turn up the lever again, then Bitcoin's gonna moon in dollar terms, and like because that marginal seller's like, wait, I don't need to sell. Like, I don't want to sell. Like, this is the only thing I want to own. And so, like I don't know what the top is this cycle. I have no clue. I think we break all-time highs this year, in 2020, or 2021. But if not, then great. I'll continue to stack. But definitely bullish from here. And through the rest of 2022, I think the cycle is not going to top at December like a lot of the previous models or cycles had. Just because of kind of this 3-month pullback consolidation, If we were at 100K right now, it'd be, still bullish, and I think we would still be at some sort of blow off top, but in December, but that's not where we are. So I think a longer bull run's in store. I hope, at least.
Awesome. Well, listen, look, it's been great to get you both on. You give me a lot of faith in the future that we can hand the baton on to a smart next round of people. I think you both did excellent work, and I really enjoy both of your coverage. I think, Dylan, your written work's excellent. Will, you've been crushing it with your podcast with Pomp, but also with your tweets. I think you're both doing a great job, so I appreciate everything you're doing. Dylan, we didn't talk about yours. What's your newsletter? How do people subscribe to that?
It's called The Deep Dive. You can just go to Bitcoin Magazine and you'll see it in the top right. It is paid, but you can just give it out, give it a try for a month using the code BITS. If not, if you don't find value in it, that's cool. I totally understand. But that's what I've been doing, and I think the content's worthwhile. So, appreciate you having me on, Peter. This was awesome. Nice chatting with you as always, Will. I'm sure I'll be talking to you later today.
Yeah, well, listen, look, you were on recently, and there was really great feedback. Loved it, and so more than happy to have you back on. And Will, it's nice to meet you. It's good to have you on as well. I do wish you all the best working on the number 2 Bitcoin podcast. I think that's a really great gig, and I do think Pomp needs to get you a microphone. I'll drop in the text later and tell that tight fucker to get some money out and buy you a new mic. And but just keep doing your thing. Look, I'll pump your newsletter in the show notes, and I think both of them are excellent, and everyone should subscribe to that.
Appreciate it,
Thanks,
brother.
man.
Thanks for having
Appreciate
me
it.
on.